Welcome to Frost & Sullivan's Growth Podcast. In each episode, we take a deeper look at transformative shifts shaping global ecosystems, from industry megatrends and technology innovation to evolving customer expectations. Today, we're exploring growth opportunities in B2B digital payment services, open banking, automated finance platforms, and embedded payments, unpacking where the next wave of opportunity is unfolding and what it means for future-ready businesses.
If you pause for a moment and think about global trade, you probably imagine cargo ships, warehouses, and massive supply chains stretching across continents. But there's another engine powering all of it, one most people never see. It's payments. Every invoice approved, every shipment released, every supplier paid depends on money moving from one business to another. Yet much of this system still runs on infrastructure built decades ago, designed for batch files, overnight settlements, manual reconciliation, and paperwork-heavy processes. But today's economy doesn't move in batches, it moves in real time. Companies operate across borders, across platforms, and across currencies. They expect instant visibility, automated reporting, and seamless integrations with ERP and treasury systems. But many payment systems still function like they're stuck in the 1990s, and this growing mismatch is creating friction at scale. Delays in settlement affect working capital. Manual reconciliation drains productivity. Limited interoperability slows expansion. And weak fraud controls expose enterprises to rising financial risk. This is why speed, visibility, and interoperability are no longer competitive advantages, they're survival requirements. And as digital commerce accelerates, the cost of standing still grows every year. So here's the question you need to consider. If your supply chain runs digitally, is your payment infrastructure still operating on yesterday's rules?
By 2030, digital business-to-business, or B2B, payments are projected to unlock $15.88 trillion in growth opportunities. That number is enormous, but it's not just about transaction volume. It represents a fundamental shift in how value moves through global business networks. Traditionally, B2B payments relied on a limited set of instruments: electronic funds transfers, cards, and checks. These worked in relatively closed ecosystems with predictable relationships. But modern commerce looks very different. Businesses now operate in multi-platform environments. They sell through marketplaces. They partner with software providers. They manage distributed suppliers. They embed finance into workflows. This complexity is driving demand for API-based connectivity, real-time settlement, automated compliance, embedded payment capabilities, data-rich transaction layers. However, the provider ecosystem remains highly fragmented. More than 61 major providers, including banks, payment processors, and FinTechs, compete in this space. Yet the top 5 control only about 29% of total revenue. This means two things. First, no single player dominates the ecosystem. Second, differentiation is still wide open. Growth is forecast at about 5.2% annually between 2024 and 2030, but not everyone will benefit equally. Those who modernize fastest will capture disproportionate value. The opportunity isn't just to process more payments, it's to own the financial operating layer of digital commerce.
Behind this transformation is a powerful convergence of technologies, each solving a different piece of the friction puzzle. Let's start with artificial intelligence. AI and machine learning are now being used to orchestrate payment routing, detect anomalies, and reduce false fraud alerts. These systems analyze transaction patterns across networks, learning continuously. Instead of reacting to problems, finance teams can anticipate them. Next, open banking. Through API-driven connectivity, businesses can now connect directly with banks and financial platforms, bypassing traditional card networks. This reduces processing costs, accelerates settlement, and enables tighter integration with ERP and treasury systems. Then come automated finance platforms. These platforms unify invoicing, payments, expense management, and reconciliation into a single workflow. What once required multiple tools and manual handoffs becomes a coordinated digital process. CFOs gain real-time dashboards, finance teams gain predictive analytics, decision-making shifts from operational to strategic. And finally, distributed ledger technologies and blockchain. In multi-party and cross-border transactions, reconciliation and dispute resolution are major bottlenecks. Shared, tamper-resistant ledgers create a single source of truth, reducing disputes and increasing trust. Each of these technologies matters on its own, but their real power comes from orchestration, how they work together. So consider this. Are your systems designed to learn, connect, and adapt, or merely to process transactions?
Despite global digitization, B2B payments remain deeply regional. There is no universal model. In Asia Pacific, real-time payment rails like UPI and PayNow are accelerating digital adoption. Interoperability initiatives are making instant payments the fastest-growing segment. In Europe, regulatory leadership shapes the market. Verification of payee and PSD3 compliance are redefining security and accountability. Checks are declining, while account-to-account and card payments gain traction. In the Middle East and Africa, fragmented regulation and uneven infrastructure create complexity. Yet government-led cashless initiatives and expanding RTP systems are driving long-term growth. In Latin America, businesses are transitioning from cash and checks to digital platforms. Embedded finance and ERP-integrated payments are becoming critical enablers. In North America, growth is driven by open banking, embedded finance, and cross-border trade. Declining check usage is accelerating adoption of APIs, RTP networks, and commercial cards. These differences matter. Providers that build regionalized portfolios, rather than one-size-fits-all platforms, gain lasting advantage. So ask yourself, does your payment strategy reflect regional realities or assume global uniformity?
As standardization increases, pricing pressure is inevitable. Margins on basic processing are shrinking. This creates space for challengers who combine technology depth with regional expertise. Consider Bitso Business in Latin America, bridging traditional finance and digital assets to optimize cross-border X and treasury operations. Look at BPC in Europe, offering unified platforms for digital and physical transactions. Or Bottomline, delivering cloud-based payment automation and fraud mitigation globally. These players are not competing on price alone. They compete on integration depth, analytics, and ecosystem reach. Benchmarking is becoming essential, and enterprises must evaluate 1. Total cost of ownership, 2. Integration timelines, 3. Risk exposure, 4. Scalability, 5. ROI potential. Choosing a provider is no longer a procurement decision, it's a strategic one. Which leads to this question. Do you have the analytical tools to measure long-term value, or are you choosing partners based on short-term cost?
Looking forward, 3 growth frontiers are shaping the next phase of B2B payments. First, AI-powered agents for accounts payable. These agents automate invoice validation, fraud checks, and approvals end-to-end. When combined with generative AI, they enhance accuracy and decision support, but they require strong data governance and compliance frameworks. Second, unified automated finance platforms. Most enterprises still use fragmented tools for AP, AR, treasury, and expenses. Providers that unify these functions while prioritizing ERP and banking integrations enable real-time financial control. This shifts finance from reporting to orchestration. Third, stablecoins and B2B payments. When integrated with traditional banking, stablecoins and DLT enable near-instant, always-on settlements. Combined with AI, they can automate compliance and reduce fraud. This is especially powerful for cross-border trade. Together, these frontiers signal a shift. In this new world, legacy systems will continue to fall behind, and providers that invest in open architectures, intelligent orchestration, and automation will define the next generation of digital finance. So here's the final question to leave you with. In a future where payments determine who scales, who differentiates, and who leads, where will your organization stand?
That's it for today. Thanks for joining us on Frost & Sullivan's Growth Podcast. For access to our research, competitive benchmarking, and best practice frameworks, head over to frost.com or email hello@frost.com. We'll be back soon with more to help you stay clear-headed and growth-ready.